Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 16th of November 2019 and we're providing our gold and silver weekly update for the week ending the 15th of November. Gold rose $9 last week from $1,459 to $1,468, having hit a high of $1,474 and a low of $1,445. In sterling terms, gold finished the week at £1,137. That's down £4, reflecting the strength of sterling. And in euros, it closed at €1,327. That's up €4. Silver rose 17 cents from $16.79 to $16.96, having hit a high of $17.11 and a low of $16.64. In sterling terms, it closed at £13.15. That's unchanged. And in euros, it closed at €15.34. That's up €0.11. The gold to silver ratio fell very slightly from 86.9 to 1 to 86.6 to 1. The Dow Jones closed on Friday at 28,004, up 222 points on the day and up 323 points on the week. And the NASDAQ closed at 8,540, up 61 points on the day and up 65 points on the week. And the S&P 500 closed at 3,120, up 23 points on the day and up 27 points on the week. Now, Brent crude closed at $63.30, up 79 cents on the week. And WTI crude closed at $57.72, and that's up 48 cents on the week. And the dollar index stands at 97.99. That's down 0.36 on the week. Having been above 98 marginally for most of the week, it couldn't quite make it on its close. Anyway, these last few weeks we've been stating quite strongly that we are likely to see continuing all-time highs in the equity markets. And this past week has proven no different. With company earnings coming out a little better than expected in the main, the Fed having reduced rates now 3 times this year, and potentially more on the horizon in 2020, and the China-US trade talks appearing to be nearing an announcement, note we said appearing to, this has buoyed equity markets, and particularly those in the United States. Now, when one looks at the US economic data and compare it with the likes of Europe and the United Kingdom, there is little wonder why this is the case. Now, that is not to say all is rosy in the garden and that there are no problems. The national debt is an issue. Equity bubbles are an issue. Corporate bond issuance is a potential issue. No recession for over 11 years is an issue. Decreasing Chinese growth is an issue. Brexit is an issue. European negative interest rates is an issue. Germany in near recession is an issue. And the list goes on and on. You get the picture. Now, many analysts who perhaps are not economists per se and do not seem to understand the new financial regime we're in globally cannot understand how this is the case. Those who study traditional monetarist theory, and even Keynesianism for that matter, could never envisage a 11-year bull cycle or non-recessionary cycle in their wildest imaginations. But we're in a different world. Unfortunately, it is a world in which the economic system will either come crashing down or an overnight reset is instigated. But for now, it's a different situation, simply because of the ability to continually print cash to ensure these asset bubbles remain inflated, at least for the time being, while in an environment of low inflation. You see, traditionally, increasing the money supply should lead to inflation. And for the moment, and please note our caveats, we're not experiencing that. To some degree, US inflation has successfully been exported, often to emerging markets and what we term third world countries. To some extent, it has also been absorbed, as these monies, these additional printed monies, have been kept out of the hands of the normal consumer, who, quite frankly, enable inflation to occur via chasing everyday goods, ensuring demand exceeds supply and therefore prices go up. But much of these monies have been given to institutional investors and corporations who in turn have created the various asset bubbles we've just mentioned. Now, what is remarkable is that both in gold and silver, whilst having performed well year to date, have not performed better, especially when you add on top of all of the problems we've mentioned, there's a significant amount of geopolitical and domestic political risk too. Having said that, however, in most countries gold has touched a number of all-time highs, but not so in US dollar terms. Silver is some way off in both, which many see as potentially exciting. It's interesting in that if we look at gold even in US dollar terms year on year, not the start of the year to today, but exactly 1 year ago to today, gold is actually up nearly 21%, and silver is up almost 19%. A very creditable performance. It's very easy for us to forget that fact. This past week, gold has held up well, and so too has silver, but they did fall back quite significantly the week before. With a high and maintaining high dollar index and all-time record high equity markets continually being surpassed, not to sink lower in price, has proven quite creditable for gold and silver. The issue, of course, now is which direction can we expect both gold and silver to go in the weeks ahead? And we say that is the issue, as we're all confident that the case for both gold and silver long-term is already fully accepted. Well, looking at gold from a technical perspective, last week saw some volatility, albeit within a moderately tight range of $29 or 2%, attempting to test the 1450 level, at which it found some interesting support. Now, without going into complex candlestick analysis, there is some concern when we take into account their size, that's the candlestick size, the previous week, and this is where technical traders are somewhat conflicted. If gold should fall below 1450 and hold, then that would prove a most negative sign. However, there does appear to be support there, and if that can be maintained, then $1,500 to roughly $1,520, $25 is back on the cards pretty quickly. Now, we cannot ignore the political dynamic here. Hopes of a trade deal between Washington and Beijing drove down demand for safe haven assets such as US Treasuries, which consequentially drove up yields. Traders also shed protection yesterday, with both the Japanese yen and gold being the victims. Now, we have to emphasize here that from a short-term price point of view, these type of announcements are important. And you can see that by gold's volatility this past week, albeit in a narrow range as already mentioned, based upon President Trump's tweets early in the week, suggesting the trade deal with China could be delayed, and the gold price rose immediately. Larry Kudlow, the president's economic advisor, stating late on Thursday, the US is on the cusp of a deal, and the gold price fell back. Now, if this trade deal does go ahead, and soon, there will be considerable pressure pushing gold prices down, as a large component of the fear trade will have been removed. Now, looking at the technicals in a little more detail, we would like to quote James Hystrich, author of the book Pattern, Price and Time, a technical analyst and somewhat acknowledged expert in Gann trading theory. This is what he says yesterday, giving both a bearish and bullish scenario concerning gold. Bearish scenario first. A sustained move under $1,471 will indicate the presence of sellers. The first downside target is the minor 50% level at 1460.9. Watch for a technical bounce on the first test of this level. If it fails, then look for the selling to possibly extend into the main bottom at $1,446.20. This is a potential trigger point for an acceleration to the downside, with the August the 1st bottom at 1412.1, the next likely downside target. So he's basically saying, from a bearish point of view, the key levels are roughly 1460, 1446, 1412. Bullish scenario, quote, a sustained move over $1,471 will signal the presence of buyers. If this move creates enough upside momentum, then look for buyers to make a run at this week's high of 1475.5. Taking out this level could lead to a laboured rally, with potential targets a pair of 50% levels at $1482.60 and $1489.20. The latter is a potential trigger point for an acceleration to the upside, unquote. So, we're looking at a key level at 1489, and if that is breached, then we're off to the mini races, not the major races. So we could very well see, in our view, 1520. Now, from a technical point of view, we fully agree with him. But as you know, as we all know, it's not all about technicals. Now, taking a look at silver, which vacillated last week within a 47 cent or 2.8% price range. Silver prices at least, stabilized somewhat from the very bearish previous week, though trading was what some may call choppy. $17 is certainly a resistance level, and $16 very supportive. And until we see a convincing breakout in either direction, the next couple of weeks is difficult to predict, really. You see, we suspect that because it held up so well last week, we may see it attempt again to head towards that 1750 level, which is the level we have been comfortable with for silver for many weeks. Equally, though, if a trade deal is announced soon and equities continue to rise, then the $16 level will be tested. But for now, we are mildly more bullish at current levels than bearish. Now, looking at the economic factors which affect both gold and silver prices, we produced 2 videos yesterday. US equities hit all-time highs again, and US-China deal underpins equities and undermines gold, where we cover some of the economic data presented last week. We've put links to these videos in the description box below. Now, the economic data last week was generally a mixed bag, and could be interpreted in either way, depending frankly on one's agenda. Our take on it generally is that core inflation, retail sales and the producer price index were broadly okay, while weekly jobless claims, retail sales excluding automobiles and industrial production figures were poor. Now, this coming week we have on Monday the Home Builders Index for November, Tuesday housing starts and building permits for October. Wednesday, the FOMC minutes. Could be worth following those. Thursday, existing home sales for October. And Friday, market manufacturing and services flash PMI for November. And the consumer sentiment index for November. So, the FOMC minutes may be of interest. And because the weekly jobless claims were poor last week, there may be some attention paid to them on Thursday this week. with most of the relatively important data coming out on Friday. None of which, unless they are remarkable, can we see affecting markets particularly. So to conclude, our analysis is that while equities remain in the limelight, gold and silver will lurk somewhat in the shadows. This situation will change, and it could indeed happen relatively soon, though we do suspect that a trading range of $1 to $2 for silver and $50 for gold is the most likely scenario for the next couple of weeks. In other words, the short-term direction will more or less be predicated on the US-China trade deal. And when it is agreed, and until then, the direction trend will vacillate, or to use a different vernacular, prices will be range-bound until there is a breakout in either direction. Now, for those considering the longer term, then look out for dips to make your purchases, and do not be panicked into making a decision one way or the other. Perhaps the greatest opportunity for gold and silver in the foreseeable future is when that equity bubble bursts. When that happens, we don't necessarily see a complete stock market meltdown, but we could very well see a 20 to 30% correction. And that would be significant enough to put somewhat of a rocket behind both gold and silver prices. But we again doubt that that's going to happen in November of this year. Thank you so much for listening. And if you haven't already done so, please subscribe to our channel. Press that bell sign so that you're notified of videos and podcasts as they are published. And please visit our website at illuminatisilver.com to sign up either as a free or paying member. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.